I'm going to give you the truth about the property market in 2026 because most buyers are about to get caught out. They're waiting for the headline, waiting for the news to tell them it's safe. And by the time it does, they've already missed it. I've done over $600 million in lending across my career, more than 7 years of it inside one of the big banks. So I've watched this exact same thing play out again and again. And this is called the delay effect. And you need to know this to get an advantage when buying property. And so here's the part nobody really explains. When something big hits the property market, a rate cut, a policy change, a good inflation number, it doesn't show up to affect property prices the next day. It shows up on a delay. So for example, when the RBA makes a rate announcement, your bank home loan rate takes about 2 to 3 weeks to update on your loan. And sometimes it takes about 1 to 2 months after that before the repayments start to change. And that's when people start to feel the effects of those rate changes. And the same concept applies to property sales data. So if you're seeing people quote data from say March to June 2026, and the government announced their policy changes in mid-May, do you really think that data is accurate? Do you really think that 2 weeks, the remainder of May, represents the impact of those government changes? It takes time for people to change their strategy and adjust their behavior. And honestly, we probably haven't felt the effects of all of it. Now, don't take my word for it. Look at the actual last rate cut, which was back in February 2025 when they dropped the rate. So within a week, auction clearance rates started to jump up from 65% to 72%. And a month later, property prices started increasing. And then over the quarter after that rate cut, every single capital city is rising, which is the truest reflection of these changes because it takes time. And the RBA's own modeling says a 1% rate cut adds about 8% to property prices, but it generally takes about 2 years to fully realize. So where are we today? Flip the whole thing around. We've had 3 rate hikes this year. Latest one being in May, and negative gearing getting pulled on established homes. That's the same delay, but working in reverse. The top end of the market has already started feeling it. Sydney and Melbourne house prices are down by about 3% in the last quarter. And the good inflation number that just landed last week at 3.8%. We see buyers still haven't moved yet. The newest positive news has only just come out last week.
And I'm telling you today, again, 0 registrations.
That's Tom Panos standing there with 0 bidders, and it's just because the market just hasn't caught up yet. It never really does straight away. He does talk about, good inflation numbers, truly respect the man as well, but it's not going to be like an overnight thing that they're going to realize and jump into the property market. Now, this is where the opportunity sits. The signal always shows up before the crowd does. And so when the next positive turn lands, a rate cut, a policy reversal, you've got roughly another quarter before the data actually confirms it and everyone piles back in. So right now, clearance rates are under 50%, half the usual bidders in the room, and that's negotiating power. The people who move during these quiet times before the headline tells them it's safe are the ones that are going to be out in front. So if you wait for the news, you're already late. The news is just the receipt. I walk clients through this before they buy. No charge at all, just so that they're not the last ones to know. Follow for more, and if you wanted me to run the numbers on a place you're looking at, my details are below.